Well, that was Shankar Sharma 7 years ago. The Shankar Sharma of today is sitting here on the set. You look
I hope
different.
I don't look too different.
You look different.
Yeah?
Yeah. Well, we've become 7 years young. I won't get into the age part.
I think you guys look the same, yeah.
No, but you look fitter for sure.
You look good different.
Yeah.
If that's the way to put it. Anyway,
Asha should be saying that.
well, Asha said it in as many words.
Fitter.
Well, the
She
markets
has
are
many
looking
words.
fitter. When we started 2009, there was gloom and doom. We are coming out of the financial crisis. Are we headed for one because of Brexit?
I think it's a matter of great concern. I don't think we should simply say it's okay, it's happening in some other country. And I think sometimes very innocuous things can trigger larger events, and I think Brexit could be one of them. So I'm a little worried, to be honest with you.
But would they really go in for Brexit? I mean, are the concerns and the fears in the currency market really valid?
It looks as if they will go. I think they should go. I don't think there is any merit to sticking around in this formation. I think so far the opinion polls or whatever they are also indicating, I think, roughly 53% or something like that.
It's a touch and go, I would say.
Yeah, it always is, but then we all know that people can vote very decisively. In our opinion polls, it's always, in all elections, always touch and go, but the results are completely one way. So I think markets are telling me that it will be an exit.
So
My tape reading is telling me there will be an exit. I mean, let's put it this way.
So if there's an exit, what happens on 24th of June?
I think if it happens, I think looking at a very ugly remainder of June and a troublesome July.
Wow. So I think the hypothesis that a couple of people had, I don't know whether you agree out there or not, that it will have a major turmoil on the currency market and thereby the equity markets get impacted in a big way. The question is how big an impact could it be on equity markets by and large and maybe on India as well because of the contagion?
Look, I've always believed that to say that India won't get affected when anything global is silly, right?
Yeah,
I
it
mean,
will.
no, we're still an equity market. I know we worship it here and we think India belongs to some other planet. No laws of economics need apply.
We are different.
We are completely different. This is
special.
India's century. This is India's decade. This is India's year.
Decoupled is the other
We
one.
have great leadership. I mean, all kind of nonsense keeps getting talked about. We are a market. We are a good country, not a great country. We are hopefully going to become great. So if something bad happens to the world, we also get hit, unfortunately. I think India might suffer a tad less because India typically suffers a bit less in meltdown situations because I think a macro and a micro both are relatively not that risky. We're not like China, we're not like a number of Asian countries who are exposed to commodities or to debt. But we will definitely get hit for sure.
Yeah, no, which I completely agree. My only thought was, to your mind, what's the quantum of impact that would come as a result of an event like this, assuming that Brexit is indeed happening? Would it
As
be
in you're talking a percentage.
ballpark? I mean, do you think it's an event which can have impact of 15-20% or would it be largely restricted to a small correction?
I think globally you could look at 10%.
Okay.
Within that, somebody will do 15, somebody will do 5. But I think if you look at the average of the global equity market, let's say MSCI World,
Right.
I think you could look at 10%.
What are the chances that we can go back and test the lows of Feb? 10% means we're almost there. Not there, but almost there.
We're not that far.
So a repeat of February cannot be ruled out.
Definitely not. I don't think in any case you should rule out anything in the markets, but you could get close to that.
For the longest time, when I say longest time, for about a year now, you've been making a case that don't buy a large cap, look at small and mid cap stocks. And large cap stocks, frankly, they've gone nowhere. Fund managers, they
For
kept
many
on...
years now, I think 2 years
For many
now.
years now. I mean, the fund managers, they keep on insisting that mid cap is expensive, small cap is where there's a leadership crisis, large cap is where the safety is. But markets will always chase earnings growth. So do you think money is still to be made in small cap, mid caps and micro caps?
100%. I mean, that, I've said this publicly, I think Indian small caps, Indian micro caps, Indian mid caps are the single best equity asset class in the world, bar none. And I think, in February you saw many of them crack 20-30%, and I think we had a call around that time when the markets
When we
were really
tracked it
good.
as well, yes.
Correct. And I said that I'd be going out and buying something that I liked last week and is down 30% this week.
So did
And
you
all
buy
those
that
stocks
time?
are up like I think at least twice from those levels. So I think let's wait for that to happen. If it happens, I think again you'll be presented in these smaller names a great opportunity to go back and buy some more.
So what's that one theme that you're liking? You mentioned that it is some of the NBFCs that do interest you. What else is looking interesting? When that correction comes, what else would you go out and buy?
I've liked small cap chemicals, I've liked small cap infra, I've liked small cap financials. And remember, small cap don't necessarily lend themselves to a particular sector. They can be just a small cap without belonging to any particular. So there are a couple of names which again, have done quite well. I think they will do well. But sectorally, these sectors, I like, and I think if they were to sell off 20-30%, as they might, it can very well happen.
Last time when we interacted with you and Devina on the same forum, you said there is money to be made in metals. Metals have done rather well. And from the lows, the stock like Tata Steel, even Hindalco, Vedant, all of them are 50 to 80%. Some of them, Hindalco is more than 100% actually. Is that easy money being made in metals? Is that bounce over?
I don't think it's over. Look, the first part of the move is where at least the perceived riskiness is the highest. But that's, in my view, the easiest part of the move. So, oil, for instance, might go from 50 to 70. The easy part of the move was to buy it at 27 and to exit at 40. That's the easy trade. Now it becomes a little bit more treacherous, So I think metals have had a good run. I think they will continue to do well. But I think the easy money in that trade is over. I don't think metals are a great business. I've never made the case it's a great business. I just made the case that they were really crushed. People are completely bearish. Those are the times that make for a great contra trade, and it played out. That's pretty much it. I'm not getting romantic about it and saying that, look, Tata Steel or Vedanta are great businesses. No, not even for a second.
Anything out there, Shankar, which is in that vein? I'm just wondering whether the buy and sit tight for 10-year phenomenon right now in India exists. Because if you're not looking at large caps at all, looking at smaller businesses, they would probably be. Would they be? Let me qualify my question. Would they be flippant investments? You would probably move out of them once the initial surge or a bit of a surge is over, or are you buying them for keeps, so to say? 5-10 years.
My view is a number of them you can't even exit in 1 year. So, so when you buy a small cap, it's almost like a pure PE or a VC kind of investing, because the trading volumes will never allow you a single day or a week's exit. So willy-nilly, you're forced to be a long-term investors in these stocks.
Look at the data, Shankar.
Yeah.
When we launched the channel 16th of June 2009, there was the Nifty, and that data will just come up on your screen. Rohit, please show that data. There you go. Nifty was at 4,500. Today as we speak, it is 8,000 plus. The Sensex was at 15,000 plus minus 40 points here. Today it's at 26,500, and the Bank Nifty is 7,000 to 17,000. Now it's very easy to look back and do rear view driving and talk about, okay, this is what happened, this went up, this went down. What happens next? If I have to make another chart, this is 2016, but for my 10th anniversary, 2019, what do you think the screen would look like?
I think small caps will be up 3 times.
Okay. As the index?
As an index.
That's a big call, because small cap is a combination of not just one sector.
It'll do well.
It'll do well. Are you
You're
not
talking 10 years, right?
Yeah. Are you not worried about the lofty P multiples which currently are there? I can give you data which seems to be indicating that for the first time in history, the P multiple difference between large cap and small cap is at an historic high.
I'm not a big fan of PE multiples. You can justify any multiple in this world. You give me a 5P stock, I'll justify why it is 5P. You give me a 100P stock, I'll justify why it's 100P. So I don't waste too much time over this. I just look at the fact that these small companies will tomorrow become large cap companies. They will replace large cap companies. Number of them have broken business models. They will implode over time. Something has to go up and replace them. That's the order of the world, right? So you have to buy some things which will get there. If not there, then at least close to that.
If I look at Shankar's investing career, we've been interacting for over 1.5 decades now. He identified Himachal Futuristic in 1999. It was a 2-digit stock, it became a 4-digit stock. You bought Tata Motors, I think, in 2010. Nobody wanted to touch it, and that became a multi-bagger idea for you. And another big call, which we don't really refer to a lot, is that you were the first one as a house to go bearish on Reliance and Bharti. I think 2008 you went bearish on Bharti. In 2010 you were a bear on Reliance when the world was talking about the gas theory. So which is that big call now? That you are against the consensus. And let's call it Shankar Sharma's seventh anniversary call on ET now. We'll call it that after 2 years.
I'm making a category call. I'm not making a stock call. I think it's really a small cap market. And, I know Fund managers or CIOs have compulsions because most of the assets are vested in large caps. They have to like what they have bought. But I think the pie chart will change dramatically over the next 5-10 years' time. And a lot of these companies won't remain there. A lot of the smaller ones would have taken up the slack. That's a big call.
That's interesting. So, what would be the Nifty composition in next 5 years from now? What's going to get out?
See, if you look at the churn in the Nifty itself, I think from 2008,
Yeah.
40%
Lot
has
has-
40%
yes.
has been churned out. So it's a huge churn. Not just the Nifty. Look at the FTSE. Look at the Nasdaq. Look at the S&P.
It's the nature of the
Look at-
index.
Look at the churn. So my bet is really, what gets into it. That's what I really would like to spend my time thinking. Rather than if people are already in that index, then I like that because it's in part of the index. My job is to see what's going to go out and what's going to come in. And people don't have to necessarily bet on what's going to go out. I think to take a bet what goes in, that's an easier bet to take. And there are many companies out there which will get there.
Like one name.
Can't.
Give me
I think now the regulations are so silly that you can't even talk about a name at all. So,
Well, as long as you declare your interest in it. So you
I
can
have an interest in the market here. So I've declared my interest. Why do I have to keep saying interest and interest and interest? So let's just suffice it to say, I think, large caps are fully baked. I think most of them. Maruti was a stock we have liked for a long time, but the yen is a serious issue. Let's not brush it aside. So
What will happen to IT? Because that's where I think serious disruption seems to be happening. The old guys will get weeded out, new technology platforms are kicking in, some may adapt, some may not adapt. But I'm sure that 3-4 years from now, the 4 IT companies which are part of the index, one of them will get out and a new one will enter.
I hope they don't get out the way Satyam got out.
But in general, you
Hope
think
not.
big money in IT is behind us? At least the large ones.
That's what is worrisome. The two big trades in the large caps have been IT and Pharma, and we have liked them for many years, and we have talked about it many times. I think they are probably at a little bit of a aging kind of situation for different reasons. IT for obviously reasons of disruption, Pharma for reasons of their own making, that we all know. That is a problem. That's why that's one of the reasons why I don't see any huge conviction trades in the large caps here. What is so screamingly good that can make you even 20% compounded? Forget about 50% and the 100%.
No private banks? You don't think that will happen?
If you look at it, by the way, most of them have been very flat for the last 12, 15 months. They haven't done that much. Okay, barring one or two which are up 20% in about 15 months. Quite a few of them are actually flat, and a few of them like ICICI Bank, etc. are down.
Right, true.
So the sector is no longer a uniform sector bet. Now it's kind of a little patchy.
Right.
And banking, it's my belief, ultimately the asset growth or the earnings growth that the private banks are showing will again come back and cause a problem a few years down the road. As we know, the PSU banks created that big bubble. Axis Bank's declaration that almost 45%
list,
of
yes.
its equity can be wiped out. That means 4-5 years of profits didn't really exist, right? That is the plain reading of it. So I've always, and you've heard me say this many times, that banking is all smoke and mirrors. It's that, I'll keep booking earnings today. 4 years down the road, I'll take a charge below the line that guess what, there was some problem. So basically that's almost all the profits you made.
So, I
So my,
remember-
sorry,
Neeraj, go ahead.
just
No,
my final question to you would be that do you think spaces like, for example, chemicals? A lot of people talk about how specialty chemicals is what IT was 15 years ago. West
I don't
moving
think
to east.
you should get that romantic.
Fair call. Let's not get that romantic. My question to you is this: where within the small and the mid cap space? Again, I'm not looking for stock names out here, but where within that universe do you believe there is the industry and there are managements existing which can make these companies large caps potential entrance into Nifty or Nifty 100? The index may be debatable.
I wouldn't be surprised. And just if you're talking chemicals, I think there is a big trade in which China has problems. China is cracking down. Chinese companies are looking to partner with Indian companies to offshore their production into India.
Yes.
Capacities for an average Chinese company for any chemical you care to name is like 10x of Indian capacities. If any management manages to get a Chinese company to come on board, come to India, set up a capacity jointly, Suddenly that company will have like 5x the turnover that you're talking today. So it could be transformational, and a number of these companies could be candidates for that kind of a upsurge in revenues. It's not just incremental over 20% or 25%. I know for a fact that a number of global chemical majors are looking to India now to source big. It's almost like an IT thing that big contracts can come their way.
Yeah.
So
But
this is
I
like
don't
the
think
made in
it's the
India.
quality of business is as good as IT. IT was a different kettle of. This is pure online manufacturing smokestack industry. So they are completely different kinds of
17
business.
18% business, you get the cycle right, you make your money top of the cycle. When P multiples expand, maybe time to get out. This is not a long haul 10-year call.
I'm not making that case. It's 10 years or 1 year. All I'm saying is that the sector is at a point when numbers could be dramatically higher than what we are modeling for because of a big wholesale shift from China to India.
Okay, closing comment from your closing question from me, and then when three of us anchor, Aisha always has the last question. She has the final call. So my question to you would be that in the past you've not shied away from making. You've identified pockets of bubbles. You identified the 2008 crisis. You talked about a bubble in real estate, I think in 2010. So where do you think markets are really mispricing growth? Where do you think money can be made by going short, or money at least could be saved by not buying them?
I think the only area where there is over ownership, really speaking, is private sector banks. I mean, that's everybody's must-have list. I'm not saying it collapses tomorrow or it even collapses. All I'm saying is that those kind of things are ripe for disappointments in the time to come. And I think we'll get
Even
there.
the HDFC banks of the world.
I mean, that's a company. Forget the stock company. I've personally known. I've known the management before they entered HDFC Bank. So I've been privileged to have known all these people. So I'm not making a case on HDFC Bank or any particular bank. I'm saying it's an over-owned sector, and that inevitably ends in disappointments. I'm not saying it ends tomorrow, but that's the only area where I can see big disappointments. Maybe 2 years out.
Okay, on that note, we will let you go. Amazing having you on the show as
Thanks
always.
very much, and again, congratulations on your 7th
Thank you very
anniversary.
much.
Thank
I think you
you.
timed your entry very well. June was about the time markets were turning up.
Yeah, I was actually.
Let's
just
not we are
looking at
talking.
that,
Let's hope we are not talking at the peak of the market
I
now.
hope not.
Cross fingers for that.
We have no reason
Thank
to
you very
believe
much.
that this
Sure,
is the
great.
peak.
Thanks very much.
Okay,
Thank you very much.
good
Thanks,
chatting
Shankar.
with Shankar.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.